When the US government tells you a recession might be coming, when the Federal Reserve blames tariffs for the economic downturn, when Warren Buffett warns that tariffs will erode the value of the US dollar, when the giants of Bridgewater say the monetary system is collapsing, when the global bond king says US bonds will face massive sell-offs, when George Soros's hedge fund says America is being shorted, that means the people who can crash the world economy with just a finger snap. They are all saying the same thing. The United States is rapidly heading toward collapse. And indeed, US stocks, bonds, and the dollar are all falling together. So, is it game over for America this time? In the coming month, we must be mentally prepared for the worst-case scenario. The collapse of America, bankruptcy, and the US dollar turning into worthless paper. But will it really happen? Hello and welcome to Money Tao. We've heard all of this before. The last time was during the 2008 financial crisis. Back then, even American banks collapsed. The US stock market crashed. Housing prices tanked. People's assets evaporated. But ask yourself, has America collapsed? Gone bankrupt? Have US stocks, bonds, and dollars turned into worthless paper? You'll realize that the core assets held by any national treasury are just two things: gold and foreign exchange reserves. In other words, if a country earns income, it either buys gold or foreign currency, then stores it in the national treasury. Why? Think about this. Today, if Japan wants to buy oil from the Middle East, if Germany wants to buy advanced chips from Taiwan, if Brazil wants to repay its debt, would you accept Japanese yen, euros, or Brazilian reals that each country printed itself? Of course not. There are only two things we accept: gold or US dollars. If you want to do business with me, if you want to pay me back, I will only accept gold or US dollars. That's why over 80% of global trade is settled in US dollars. Without dollars, you can't even buy food or oil. Take India, for example. In 2023, due to a shortage of dollars, they couldn't afford oil imports, and gas prices spiked across the country. Or take the Asian financial crisis of 1997. Thailand's and South Korea's currencies crashed because the world rushed to sell them off. Simply put, the world lost confidence. Nobody believed those currencies could buy real goods anymore. They were on the brink of becoming worthless. In that situation, if Thailand or Korea had held large reserves of US dollars, they could have used them to buy back their own currency, stabilize the exchange rate, and prevent financial collapse. This is why countries like China, Hong Kong, Taiwan, Singapore, Saudi Arabia, and Japan either hoard gold or US dollars. The US dollar has become the world's reserve currency, and you'll notice that the world has now accumulated nearly $10 trillion in US dollar reserves. But these dollars aren't locked up in vaults. They're being used to buy US Treasury bonds like crazy. Why? Because people understand that the US Federal Reserve can print money. Today, Americans use printed dollars to buy goods from Japan, goods that Japanese workers struggled to make. And all they leave behind are green pieces of paper printed by the US. Of course, Japan can still use those dollars to buy goods elsewhere, but if the Fed keeps printing money with no limit, the value of the dollar will eventually fall. In fact, over the past 20 years, the purchasing power of the dollar has dropped by 40%. That means if I did nothing but hold cash, I've already lost 40% in real value. Cash earns no interest. So if I don't use it to buy US Treasury bonds, it's like someone is quietly stealing from me every single year. Now take China. It's said that China earns over $1 trillion each year from the US. So what happens when that money flows into China? If China doesn't send those dollars back out of the country, the value of the Chinese yuan will surge and go out of control. Here's how to understand it. Let's say a Chinese factory earns $1 billion from the US. Can they just use those dollars directly inside China? No. They must convert them to yuan to use domestically. So when China earns hundreds of billions of dollars a year, those dollars get exchanged into yuan, causing the yuan to appreciate. And when the yuan rises in value, Chinese exports become more expensive. What used to cost $100 now costs $150. Foreign buyers stop buying. Orders dry up. Factories shut down. Millions lose jobs. The economy collapses. This is why countries remember the lesson Japan once taught the world. Back then, Japan sold a massive number of appliances and cars to the US and earned a mountain of US dollars. So what did the Americans do? They set up a trap, the infamous Plaza Accord. Japan was forced to sign it, and the yen's value doubled. $1 used to get you 240 yen. After the deal, only 120 yen. That means Japanese goods became twice as expensive overnight. What happened next? Major brands like Toyota and Sony stopped selling. Factories began relocating to China. Japan entered its lost decades. 30 years of economic stagnation. The lesson? If a country's economy depends heavily on exports, if it makes money by selling products overseas, and if its currency suddenly strengthens, its goods become too expensive, buyers disappear, factories close, the economy falls apart. And Americans stop buying from you. They move on to the next cheap supplier. That's how China rose. Remember this principle. When a country earns a lot of dollars, if it doesn't move those dollars out, its own currency will appreciate, hurting its exports. That's why when countries earn dollars from global trade, they use them to buy U.S. Treasury bonds or gold, then store them away for future use. And when the time comes, they sell those bonds or gold to get dollars for spending. This is why foreign exchange reserves mainly consist of U.S. dollars and U.S. government bonds. But why U.S. bonds? Here's a comparison. Brazil's central bank issues bonds with interest rates as high as 12%. Meanwhile, U.S. Treasury bonds in previous years paid under 2%. That's a 10% difference in return, right? And yet the world still rushes to buy U.S. bonds. Why? Because even if you earn 10% interest from Brazil, if the Brazilian real crashes, you can lose 20 to 30% in value just from currency depreciation. In the end, you may make 10% interest, but lose 30% in currency value. That's a net loss. And that's just the loss on paper. If Brazil's currency actually collapses, even if you hold a large amount of it, you might not be able to sell it at all. So what's your choice? Don't want US bonds? You think British, German, or Japanese bonds are more stable? That's why, even with all the talk of America collapsing, the truth is, the US cannot go bankrupt. Here's why. If Ukraine borrows trillions of dollars and can't repay, it goes bankrupt. Its currency, bonds, and stocks become worthless because Ukraine can't print US dollars. But America's debt is in its own currency, the US dollar, and the world is holding nearly $10 trillion of it. And who prints those dollars? The US Federal Reserve. So how could America ever default? This is why even American officials admit the U.S. military's expenses are paid by the world, not by Americans. Because the world lends America money, and America can just print more to pay them back. This is the power of dollar hegemony. Some people say times have changed. They believe the U.S. wants to burn down its current economic house, so it can rebuild a stronger one, to crash the global economy, only to rise again as the fastest to recover, to push the world to the bottom, so America ends up on top. In simpler terms, they want to collapse their own house so they can rebuild it better than ever. Many don't believe this theory. They think we won't need dollars in the future. Maybe we'll use euros or Chinese yuan instead, which means the US can't strangle the world like it used to. And I agree. The world is now actively pursuing de-dollarization. The US dollar can no longer rob global assets so openly like before. But let me ask you this. The world holds over $10 trillion in US bonds. How much global capital is flowing into European or Chinese bonds? If today the world were ready to lend China or Europe $10 trillion, if global investors started hoarding yuan or euros, then yes, China and Europe would boom overnight. Dollar hegemony would fall. America's reset strategy would fail completely. But that's not what's happening. Even when countries reduce their U.S. bond holdings, what do they hoard instead? Gold? And which country holds the most gold in the world? The United States. So ask yourself, why are the biggest financial players, even the U.S. should be Fed and government, still working so hard to prop up the U.S. system? Because they don't want America to collapse. They want the world to collapse. They want a financial crisis, not an American Great Depression. They want to use the rules of finance to control the world, not just rely on tariffs to make money. This time, it's the closest thing we've ever seen to financial looting of the ordinary person. If you're just working a job, doing nothing more, you're working for free. Your money is flowing directly into the hands of capitalists. And those still stuck in old stocks? They'll lose everything. If you don't want to be a victim in this game, if you want to rise above your current class, follow this channel, because I'll keep sharing more with you. And if you're worried you'll forget all this later, just like you've forgotten other advice, then like this video now. It'll automatically save to your playlist so you can come back and watch again anytime. Many people say the U.S. tariffs on the world have failed, that they only lasted 90 days, like a game of release the turtle. But if you understand what I've just said, you'll realize this round of tariffs is actually a modern version of the Plaza Accord. What's the goal? To show the world what happens when you don't follow the rules. Look at the U.S. dollar index. Since the beginning of the year, it has dropped 10%. Many say it's because global capital is fleeing the U.S. Everyone's selling dollars. That's why the dollar is falling. They think America is losing badly, but is that really true? I said this in a previous video. A falling dollar is actually good for America. Why? Because this year, the U.S. has to repay trillions in debt. If the dollar's value drops, then the real amount they repay also drops. At the same time, it triggers a global stock and bond crisis. The capitalists who sold off their stocks in advance now sit on piles of cash, ready to scoop up global assets at bargain prices. Meanwhile, the Federal Reserve gets to legitimately print money to save the market. All of this, you can verify yourself. I won't elaborate further, but here's the key. In this tariff war, the result we're seeing is that aside from China's and Vietnam's currencies losing value, most other currencies have risen against the dollar. So, what does that mean? Let's say you're a Japanese businessman. You sell goods to America and earn $1 million. Now, 30% of that goes to tariffs. So you're left with $700,000. Then you convert it back to yen. Previously, that would get you 10 million yen. But now that the yen is appreciating, you only get 8 million yen. So what just happened? You lost part of your profit to tariffs, and then lost even more because your currency rose. In short, tariffs plus currency appreciation equals skyrocketing business costs. What do? You raise your prices when exporting to the US. But that's exactly what America wants. That's the core logic of the Plaza Accord. And now, the tariff strategy. It's not just to raise your currency's value. It's to make your exports to America so expensive that no one will buy them. Your goods sit in warehouses. Your business collapses. Unemployment soars. Your economy tanks. You lose 30 years of development. Just a few days of tariffs. And Trump already said it. The world is lining up to kiss my ass. Because everyone remembers what happened to Japan. That image on the Great Wall, reminding the world of 30 years of Japanese pain, is now a mirror for many other nations. Today, America has to pay less to the world. Meanwhile, goods from the world become more expensive for America. Soon, they won't sell at all. And many countries will become the next Japan. So what can they do? Only one thing: devalue their currencies. And how? Only two options. First, sell their own currency. Second, use those proceeds to buy foreign reserves, namely US dollars and US bonds. That's why we're seeing US Treasury bonds stop falling and even start to rebound, because countries around the world don't want their currency to appreciate any further. They're being forced to buy US bonds. This is America's hostage strategy. If you don't buy US bonds, fine. Best case scenario, America slaps you with tariffs. Your currency strengthens, your goods stop selling, and you fall into a recession. Worst case, your economy collapses. The last time we saw a major currency devalue so fast was when Russian troops entered Ukraine. The Russian ruble lost 30% of its value in a single week. Why? Because the US froze $300 billion of Russia's foreign reserves. They locked up Russia's assets. Suddenly, Russia had no US dollars to trade with the world. I have a friend who used to be in the aviation business in Russia. He was the first billionaire I ever met during college. But now the money he holds can't be exchanged for dollars. On paper, his rubles only lost half their value. But in reality, he can't convert them officially anymore. He's forced to go through the black market. And there, the ruble has lost 2-3x more. His wealth has evaporated. He can only spend money inside Russia now. Many people say times have changed. If the US keeps doing this, the dollar will collapse too. Let's look at the facts. Saudi Arabia keeps talking about de-dollarization, but they still accept dollars for oil. China sells long-term US bonds, but quietly buys short-term US bonds instead. Not to mention Japan, the UK, Canada. They're all doing the same. Because here's the truth: the value of your country's currency depends on gold and US treasuries to back it. If US bonds collapse, the reserves your country holds will collapse with them. Can your currency survive that? Even when the US government, the Fed, and financial elites say America is in trouble, the dollar may drop, but it won't collapse. In fact, it lets America pay off its debt for less, drives US asset prices down, and gives billionaires like Buffett a chance to buy everything cheap. Most importantly, it forces the world to keep buying US bonds. You don't want to? Fine. Then your economy becomes Japan 30 years ago. Or worse, modern-day Russia. So is this just a currency war between America and the rest of the world? When the Japanese, Thais, and Russians could only watch their wealth vanish helplessly. Who's next? If even your government can't protect your assets, shouldn't you learn to protect yourself? Don't rely on your nation to save you. Many people are still brainwashed, thinking they just need to hold long-term and things will recover. I've met too many people like that. They only wake up when it's already too late. Some will say, but I didn't buy US bonds. I bought gold. Sure, but you bought gold in US dollars, right? If your country uses its foreign reserves, dollars and bonds, to buy gold, that means you're depleting your dollar and bond holdings. It sounds logical, but just look at how gold prices have risen since we started shifting investments into it last year. Up 68%. So now your country has to pay 68% more dollars just to buy the same amount of gold. That's a massive cost. And if you choose gold instead of US bonds, America can tax you heavily, making it even harder to earn dollars. At that point, your country will face a dollar shortage. If US capitalists then start shorting gold, pushing prices from the top back down, and your country doesn't have enough dollars to support the gold price, you're finished. You can't support the price. Your gold value collapses too. So not only do you lose dollars, you also lose gold. In short, your national assets are quietly flowing back into America. You can say this is just my theory. But I'll tell you, history always repeats itself. After the 2008 crisis, the Fed printed money endlessly. And when the global economy was still struggling, America recovered faster than anyone else, and even became stronger than before. The world has tried to de-dollarize before, and they bought a lot of gold. Between 2008 and 2011, gold prices rose 177%. The capitalists on Wall Street laughed. They issued a command. Goldman Sachs released the first bearish gold report, predicting a 30% drop. Then, all of Wall Street followed, spreading panic with negative gold forecasts. Step 1 of their short-selling plan had begun. Step 2? Wall Street dumped gold worldwide. Gold prices crashed. The world panicked. Everyone thought Wall Street was right. So they started dumping gold too. Prices spiraled. In just 1 month, gold lost 10%. A massive crash for gold. Even Switzerland panicked and prepared to sell its entire reserve. Then came step 3. In 2012, the gold futures market opened, and within 60 seconds, there was a short order for 300 tons of gold. Keep in mind, the world only mines about 2,700 tons of gold per year, and someone just sold 300 tons in 1 minute. Did they actually own it? No, they just paid a small margin to short it. Gold prices plummeted. The fire spread. More people sold. Prices kept dropping. Gold fell 45% from the top. At that point, countries and investors had no choice. They sold gold at a loss and rushed back into US dollars and bonds. American capitalists not only moved their cash from gold to bonds, they profited massively from the short sell. This is the key. Today, America imposes tariffs, crashing global stock markets, while most world currencies rise. You have 3 choices. 1, don't buy any assets. Let your currency rise and become like Japan. Wait 30 years. 2, obey and buy US bonds. 3, buy gold. Then wait for America to pump it, then dump it, and you'll be forced back to buying US bonds anyway. No matter what you choose, America can still trigger a financial crisis like 2008. Then the Fed prints money limitlessly, loans it to U.S. capitalists at near zero rates, and they buy up U.S. assets at the bottom. Then pump the price again. America becomes the first to recover. Global capital flees to the U.S. for safety. World assets keep falling. Add tariffs, and global recession begins. Then U.S. capitalists cash out and buy global assets at bargain prices. Once again, America rises from the ashes. And the world? Back to buying U.S. bonds, back to buying the dollar, back to investing in U.S. stocks. Global wealth, sold cheap, returns to American hands. You can bet this time will be different, that America's plan will fail. But unless the world finds a new reserve currency, they're still buying gold. And gold? Still priced in dollars. And who holds the most gold? Still the United States. No matter how much the world screams, de-dollarize. In a crisis, only the Fed can print dollars and save the system. Other countries? If they try to print like the US, without enough reserves, their currencies become worthless. People ask me, what can I do to avoid the coming crisis? Honestly, even governments can't avoid it. What can a small person like me do? I'm not a big investor or tycoon. That's exactly why I can survive. I'm more flexible than institutions, more agile than governments. If they're elephants, I'm a mouse. That's why I never hold long term. Even if I know America will manipulate gold, I still buy it when prices go up, then short it when prices fall. Big players can't do that. Their capital is too large. They buy early and sell late. They're always behind. That's why, since last year, I've positioned in gold and Bitcoin. And when stocks and bonds crashed, they rose. Now, I watch and wait. If America pushes gold down, I'll decide whether to exit slowly. I choose how much to sell, how much to profit. I'm not like most people now, asking, I'm stuck in a bad stock. What should I do? Gold's high. Should I still buy? See the difference? You're reacting. I'm preparing. You froze your own money by clinging to long-term positions. You didn't use your one real advantage. Mobility. When the financial tsunami hits, you'll panic, then look to me for answers. But I'm not guessing. I have a plan. I know my profit target. I know my loss limit. If you don't want to miss the next market cycle, prepare now. Understand my methods. Make them your own. Don't shift the blame to me. The chaos will only get worse from here, but time's limited. So this video ends here. I share these ideas for free to help you become wealthy, free, and in control. If you don't want to miss out, subscribe, hit the bell, and share this video with others. And to those who liked this video, I wish you financial freedom soon. Even if just 1 or 2 lines today helped your life improve, I'll feel fulfilled.